Hello everybody, welcome back to another video, and in today's video we cover off on the stock, crypto and commodities markets right now and everything that you need to know about them, including the big news that's coming forward. We've got tensions in Europe, volatility and inflation everywhere, and we also have a problem, which is the growth sector is declining. What's in store for the value sector though moving forward could surprise you, and this chart might show you some of the things that have happened in the past. Stay tuned to find out more, plus our daily levels that you need to be watching. See you soon. Well, welcome back to our daily show where we cover off everything to do with the stock, crypto and commodities markets. If that's something that interests you, any of those, make sure to subscribe and of course smash that like button. This is for the market closed 14th of February 2022. And here we have a heat map of the most important market in the world, the SP500. It shows some red in more of the value zones, things like insurances, healthcare, energy not performing so well in the session, and growth was holding firm for a period. So let's take a look at what happened throughout the session. It was a dive in early market futures, followed by a bit of a rally, followed by a sell-off after lunch, and then another rally followed by a sell-off. So can we really take anything out of today? It looks like an up, down, and all around indecision day. Yes, that is exactly what it is, and you'll see it on the charts when we take a look at later. But it brings up two big points, a point of resistance and a point of support that day traders, scalpers, and investors and all types of traders will be talking about this week. A lot of this is due to tensions in, of course, Europe and some type of uncertainty ahead of big news. And there are quite a lot of big key point, flashpoint bits of news coming out this week that we need to be looking at, which we'll cover off today. Which sector was doing the best? Well, funnily enough, gold. Yeah, we followed gold here since December of last year, back of November, and it's finally coming through. Now, we've believed in the gold trade for a little while, only because it's really been showing some consolidation and strength in terms of it versus the rest of the market. And it is showing some breakout principles that we'll take a look at later. But gold doing best on the session 2.04, and the rest of the sectors, nothing much to note here. It wasn't like there was a strong play in defensives, XLP, XLU. We usually look at those two as defensive plays. And there was no clear sell-off into the end of the day or anything like that that we usually do look for. Now, ahead into the big news for the week, we do have some nice earnings coming out in the Tuesday session. Things like Roblox, Airbnb will be ones many people will be looking at. But I think the biggest one this week is probably going to be Nvidia. For some people, it's going to be other stocks, but I think this will show us a bit about semiconductors and see whether we can continue to rally in that sector, the best sector in the market over the last really 10 years, or whether it is going to continue to show the weakness in the chart. So Nvidia coming out, remember, Wednesday after the close, and some other big names here coming out soon. So before we get into the technical analysis, let's talk about seasonals. Let's just talk about what we're seeing right now, whether it lines up with some of the previous history points. And here we have 2014, 2018, and 2022 so far. You'll notice the first quarter is usually pretty poor, and if you've been watching for our videos for a while, you'll know that we believe 2022 is a trader's year and an investor's year when you can pinpoint the right prices, which of course we're all trying to do together. But the first quarter, we often do see some weakness. We know the Fed is going to raise rates. The question is how much. At this point, it looks like a 0.5% in March is probably almost assured. The market's pricing in an 85% likelihood plus of that occurring. But the question then, what happens after the rate hike? Is it going to be orderly? Do we actually see a turnaround in the market similar to other midterm election years, followed by a second dip later on? That's a scenario that we're playing out here in our minds. And I think it's going to make sense with the technicals, and hopefully it does, as we see them. Another thing is that if we believe in positivity here in the markets, that while 2022 could be rough, once we get more of an idea of whether this inflation is persistent, the opportunity for investors and for traders could be extreme come Q4, Q1, and Q2. Remember, this is 70 years of data during midterm years, and we tend to have weakness similar to the 18 time, and then we sometimes get amazing returns. So if you're looking further into the future, there could still be some positivity from the markets. Now, it's not coming from earnings. We know the earnings season is relatively pretty good. 73% beat rate, 711 companies that have come out with their announcements. Misses is only 260. So it's not really about this current fundamental earnings. It's just saying, have we just topped? Have we seen the best earnings that we're going to see out of Google, the FANG stocks, technology, and everything's a downhill slide from here due to inflation and cost concerns, wages, etc.? That's the question Wall Street's trying to ask. So it's not really a question of whether we are in a point here of the market being overvalued in some companies. Maybe it's okay, but it's more, can they continue that growth as well? So let's be the devil's advocate here and say, okay, what's happening in the markets? And this is a great chart to really bring up. Basically, it's the difference between the growth sector, the value sector in terms of returns, and obviously the 2-year rate down here. Now, what we've seen in the past decade it's been all about growth. If you've invested in growth, you have of course done much better than value-based plays. But there is times and means for everything. And people have of course been discussing the idea of value now for the last year. Energy sector, obviously, financial sector, and REITs have done the best in the last 12 months if you have a look at the charts. So growth was very quick to reprice itself after the pandemic. We all know that. But if we have a think about where it is right now, in comparison to the drop on growth, because this is an attack on growth at this point due to inflation concerns and obviously pricing concerns, when compared to the value sector of the S&P, it's not a broad-based sell-off. We know the market isn't selling off like it's an epic crash across everything in the economy. It's mostly just hitting up this particular subsection of the markets before. Now, if we go back in history and we think about when this may have occurred, what do we know? Well, we know, of course, we had the tech crash. We also know that we had value and growth after that. And while this was a different time, and you can make a lot of arguments for that, what initially happened is as we saw the 2-year rise, we actually saw value continue to outperform during the hiking period in comparison to technology. Now, it's a different time, but it is an interesting factor here. And that's what a lot of the Wall Street algos are partially doing. They're looking at this rise in the 2-year rate and they're saying, well, maybe it's time for us to get out of some of these companies, let that come back down to earth a little bit here and get reevaluated. And we're going to push our money into the value sector, into more of these fully fledged companies that don't necessarily have as much debt, et cetera, in a higher inflation environment. Now, it makes sense, but it's just an interesting way to think about it. And I'd be looking for breakouts on some of these sectors. And I think a lot of people sometimes underutilize their investments in sectors because they love growth stocks. Hey, I do too. Growth stocks are the best. There's no doubt that if you hold them over a 10-year period, you're probably going to outperform the market. But when you're talking about trading, you trade anything that comes when it's going. If you'd been in energy for the last year, you kicked everyone else's ass. If you've been in energy predominantly as your trading vehicle for 2022, you're a winner. And that's what we try to do here on the channel. We try to break down some of these sectors that we're looking at. We've bought up Jets recently, the recovery play into the US summer holidays, something that's looking much better on the charts. And we will continue to cover that over the next weeks. We've talked about gold. We've talked about other things that have done much better than the market itself over this period. So just remember, value at the moment is still looking pretty tasty for a lot of Wall Street players. And it's not a broad-based sell-off, it's a sell-off in the growth sectors, which we still love for the longer-term investment here. Let's talk about the VIX, because the volatility is still extreme. We're above 28 in terms of 28.33. We're obviously above the 20. And when we say the VIX is above 20, what do we like to do? Be fast, be nimble, be quick, and get those daily kind of day trades, scalps, and investments at the key level. So VIX is still very high. We expect it to kind of drop a little bit here unless the SP500 goes under a key level. Let's talk about the 10-year, obviously sitting around that 2%. This is a big deal for a lot of traders out there, a lot of war between the bulls and the bears at this rate. And we don't believe the Fed will be able to probably raise as much as they think they will. The new fair value, even though the Fed says 2.5, could really be 1.5 by some of our calculations in the team. But realistically, we're sitting at 2% here. The 2 years sitting at 1.55. And until these start to drop and turn over a little bit, it's hard to see the markets making a full recovery, because while we have rates this high and so much uncertainty, it's one of those key 4 factors that we look at in markets to try to find a base or some form of accumulation pattern. Let's go through a few other things. Let's start off here with the dollar index just quickly. We reported on the dollar index sitting at 95.80 being a big resistance breakout. So far for the last 2 sessions, it has gone up. Dollar index is not the favorite of the trading plays right now, but it's certainly been quite strong, and the follow-through day trades have been good. Be careful around the 96.50. Why? Because it's a bit of a resistance zone. We've seen some problems there in the past. So dollar index, been a good trade. At this point, still looks long, especially when you go over to things like the weekly chart, but it's not as good as the others. Now, where things get more interesting is gold, and I'll give a clap out for anyone that held gold through this time. We loved it over here with those double pin bars off the trend line. It was then or never. And gold has finally hit our first target of 1870. So well done to gold traders. A lot of people gave a lot of gold traders and silver traders, I would say, a bit of crap over the last couple of months and years. And I think it's about understanding the asset. If you're in it at the right time, it's okay. If you're sitting there holding it, history will tell you it has these big bull runs, and then it does nothing for a long period of time. So we're at here, the 1870, a key resistance level. We've seen that before. The good thing is for gold is, let's say it consolidates here and then it breaks through. The next stop is probably 1910. If we breach through 1870, most likely we'll come back down and test this level, and we'll also be given as a trader an opportunity to probably get back into a good trade going towards that 1910 again. And this is where gold becomes really cool, because it has some great targets on it in the future should we continue to see this bullish strength. The daily pointed out strength, 1870 is reached, certainly a scale off kind of level for many traders out there. But if we continue to breach through, 1910 and 1960 become very big targets for traders in this area. If we look at silver, it's very similar. Look at silver knocking off a big rejection candle. So we like this one, very similar setup here, double kind of rejection off the low, took out stop losses, all the right stop hunt characteristics. The psychology was good for the market. We close above, we move higher, reject, and then all of a sudden we've got a nice bullish close above this level. So anyone that's shorted silver has probably been either stop hunted, as in their stop's been hit, or they're still in the level and they're going to start now getting squeezed. Remember, this is kind of the thing that can occur when you see this price action. Next stop for silver could be as high as 24.50, and this bodes well for the gold trade as well. So we'll come back to that a little bit later. US oil doing well, obviously tensions in Europe. This is the problem with it. It's spiking oil and it's gone a little bit higher than I would expect. I would caution on oil, even though the trend has continued to go up. Look, our target here was 92 on it. It has gone higher. That's good if you're in oil still. But the main problem with the oil price is mostly how far it's become extended away from our mean reversion. So that is the 20 exponential moving average. I can't think of a time really that the market has been 17.68% away from the 20 moving average exponential. It's been a long time since oil's been able to do that. And if you go through history, especially on the buy side, it's very rare that it's done it. And often it's had that kind of blow off top effect. So just be careful when you're trading oil. I think it's going to be one of those price kind of movements. You need to follow it with some kind of moving average. I think the 4-hour 50 has treated us pretty well on this uptick. You'll notice here we've had buy zones across that 4-hour 50. That might be a good level for you. And 106 is the next key resistance. $100 obviously psychologically, but 106 was one of the previous zones. Let's move off that though and talk about stocks, because obviously we've focused a lot on some of the commodities. They are maybe the hottest trades at this time. But let's talk about Tesla. So Tesla continues to show a bunch of weakness here, and it had a little rally followed by some sell-off. So you'll notice these two lines in here, basically an area or a zone of interest for me in terms of I wanted to see how the market was going to interact with that area. A lot of us look for, obviously, pullbacks and then look for selling the rips. And I think that's kind of what happened here on Tesla. It rallied up, it got through the first little support here, and then it went to the second level, which is the bigger one, sitting around that psychological of just underneath the 900. It's hit that level and then instantly sold off that zone. And I think with Tesla, we're in a point here where it's a really great day trade. If you find the right levels, then you can do very well. What are people going to be looking for in the next session? Well, of course, if you're a bull on Tesla, you're looking for it back above 900. It breaks 900. Where's the logical conclusion next up? 945, a very nice percentage point. And I think you don't want to be necessarily too biased either way here. If it breaches down, especially if it gets through this previous low here, where's the next logical conclusion? Well, you're thinking 820 to 800. So there's going to be a nice day trade on either of the breakouts here. At this point, it's looking weaker than it's looking stronger, but Tesla can do anything, as we know. So some key levels here as we see more clarity in the markets coming through. Conversely to that, we have ARKK here, obviously Cathie Wood's fund. We like to do a bit of analysis here because at some point this fund is going to improve. And when it does, because we can see the volume coming through hard, there's buyers here. There are buyers, there are sellers, of course, but there are buyers. Price action looks horrible, but this 20 exponential moving average, the red line, boy, oh boy, has it looked pretty good. I mean, 20 exponential red line, it's held it down. We've seen strong sell-off pressure through that. So if we ever break through this, especially breaking the trend line at the same time, that's one of those steps of recovery that we really, really like to see in the markets. And this would be an amazing accumulation. For this point though, it does still look weak. We've got rejection candles, rejection, another rejection candle. Follow through could push us back down into these lows. And at the same time, we would expect the market to be declining if that was occurring. But any bullish action past this point, I think a lot of people will come back in, including algorithms, into this market. We mentioned gold before. We said we'd revisit it. I just want to revisit it from a sector base. If you think about it, this is the first weekly close last week with all of this massive amount of channeling that we had as a breakout. So gold's broken out. It's had a great Monday from that session, and that's partly why it's looking quite good. Now, if you think about a channel from the perspective of how you would technically trade it, you usually trade it from the weekly perspective as taking that distance and extrapolating that out. And funnily enough, where does it come to? Exactly our downward trend. This is going to be the main fight for gold. It looks like it could probably get there and it will move into this trend line. But if it struggles here, or if it breaks through, it could be a very big upside. We've got to remember where gold stocks were and where they are now. Certainly not very good. And the upside here is significant, especially on the stocks, should they even go back to this level. That's a 21% increase. It can be seen as a little bit of a partial hedge to market uncertainty. And even as the market recovers, gold still can go up. Remember, go do your analysis with gold versus the SP500 and Nasdaq during that early stage of recovery. It did something very interesting there. IWM, Russell 2000, still looking weak. This is kind of like our bit of a health recap on the US markets. If the small companies are doing poorly, it usually doesn't bode well for the rest of the economy. We know we have a lot of concerns here, there's no doubt, but we still do have high employment. So employment is still looking pretty healthy. That's one of the main indicators we look for to really assess recession. So we'll have to see how that plays out. But we do have that Wyckoff distribution. At this stage, still looks weak. Unless it gets through 210, we can't really be saying, okay, yes, this is looking like it's turnaround going bull. So still bearish here on IWM. Nasdaq, this is where it gets interesting. There was a bit of a sell-off, bit of a rally, bit all around. And this has probably been the best trade. The QQQ Nasdaq has been the fastest trade, and we can actually use the SPY to get ourselves an idea of where the markets are going. So we have some resistance. We obviously have some support sitting around the 14,500. A lot of traders are going to be looking at this price action and saying, well, if we close underneath this 14.2 in the next session, where's the next logical conclusion? It's going to be somewhere around that 14,000, yeah? Huge support. At this point, you expect buyers to try to recap this market, and day traders will be there looking for the right signs of recovery and trying to get that. If we do end up rallying, where do we expect sellers to try to sell that rip? Somewhere around this 14.5. So I think we've got two big zones. We've got a buy possibility down here at the 14,000. We're in the middle of that area coming into some big news, which we'll talk about soon. And the 14.5 zone will be a big fight between the bulls and the bears, because the bears do not want the market above this price. If they get there and it gets above, that won't really be very strong to the short side anymore. And a lot of people will then start to buy those dips as we see recovery. So we'll see how that plays out over the next 24 hours. But let's go over to the SPY, because the SPX, that's where we're getting the strongest signals. at this stage towards more of a short than long at this stage. We still have the double top, which is in play. It technically hasn't completed. Obviously, the distance between this and this would really dictate that we should be going back down to that 4,300, 4,250. That's where the options kind of point to as well. And we'll talk about that in a second. But let's go through the weekly. It's been a while since we've seen any formation like this, especially to the short side. Now, we've seen some strong buy levels where you get these big wick rejections. That shows incredible strength in the market. The big players are buying. Over here, the big players are buying. Huge weekly rejections. It's hard to ignore them. Money flow comes in, bam, there we go. Over in this area though, what have we got? Well, we've got two big rejections off the 4,600. For bulls and people that believe in the market and obviously are optimistic, which does pay usually over the longer term, 4,600, a closure above that is a serious move. And if that happens, you've got to think we go and not only test 47, but possibly test all-time highs. It hasn't happened yet, but it's going to be a big zone. At this stage, what could also happen is we see the market coming down and retesting that 4,250, 4,300. It's the most logical conclusion most people have, and a lot of sell the rips are going to come into this. Similar to the Nasdaq, where's our key zone? Well, I've boxed it up here for us. So here it is, and we've got that key support, key resistance zone. If the market does rally, what do we expect to potentially happen here? Maybe we get shooting stars. Maybe we get engulfing candles. Maybe we get lightning bolts down in the smaller time frames. A lot of traders will be looking to the short around this area if it is hit. And I think if we get the right confirmation, there could be a good opportunity there to get it back down. Again, we go back into this area. There's going to be something that'll hold up the market, or at least we suspect it might hold it for this week. And it comes into options. We talked about this last week. We've been pretty accurate with being able to see the market manipulation to a degree using options. And there are a lot of puts in comparison to calls here on the SPY for expiration. If we think about it, what is that? That is a huge amount of puts that are sitting right on the 425 on the SPY. So that's 42,000 or 4,250. And that area there and 43 or 430 on the SPY, those levels make sense to the technical levels. So if we do see a market coming down, and this isn't a guarantee, it's just one of those things that tends to happen, there should be some form of buyer support around there, you would think. The market's not going to want to pay off the 425s necessarily. So that's something that's important. If we go on to the next week of expirations and have a think about it, there's not many calls there at all, actually. And the market is still very bearish into that point. But the big puts become even lower and they go even lower. So it's not conclusive what's happening here, other than there's not as much pressure on the 425 once we go past this week's expiration. Let's move over now to the crypto markets. Bitcoin's doing pretty well. We are actually seeing it hold the level. The daily has been mostly negative, but Bitcoin, maybe it's the Super Bowl effect with every second ad being a crypto ad. Who knows? The level is just holding, and Ethereum's just holding as well. Big level needs to hold for bulls to be back in the market. And let's say this becomes, let's say, gold of the crypto world. That's what we sometimes see it trade as. Then we need to get back above 46,000. Above 46, very bullish here, up to 50K for Bitcoin. Very nice movement. And if you're thinking about the weekly, it didn't really close very, very well for, I guess, the bull case. It closed pretty poorly. But if you don't see follow through, how can you go bearish on this? So could this be a big trap in terms of what happened here in manipulation and we end up closing above? We don't know. We'll keep coming back to it. The Ethereum trade seems to be the better one though. Trend line down, still holding support. It's just gotten above 3,000, which is a fairly big deal. And if we go into the small time frames like the 2 hour, you'll notice it's formed a little bit of accumulation base here. So as this candle closes, it might be giving us confirmation that crypto might continue to have a little rally here. And maybe we even go test those 3,300s again on Ethereum. It's certainly a positive sign, the first one we've seen in the last couple of days of trade for crypto. For the week ahead, everyone that's watching the news, I know this is a long video, but there's a lot to go through here. It's a big time in the markets. PPI, we have that coming out 8:30 a.m. on Tuesday. On Wednesday, we do have the big one. So we've got core retail sales, another important event. And this is going to be a market driven by news, not necessarily a market that's driven by just technicals alone. Technicals will help us on the small time frames, but just remember, news is going to be like this and flick the switch depending on what happens. The FOMC meeting minutes, that's going to be a big one as well. 2 p.m. on the Wednesday, New York time. And then that's really the end of the big news other than the earnings. So for everybody out there, good luck in the markets. Please remember to subscribe if you enjoy our videos. Smash that like button and we'll see you in the next one. But I tell you what, it's a great time to be in the markets, recognizing these types of trades, recognizing these scenarios. And also for many people, it'll be the first time they've seen a proper little correction here in markets. It's going to be one of those times that you need to realize that this is all about risk management, and hopefully you're doing it correctly. See you soon. Bye for now.